So, ladies and gentlemen, I have Tanya Canfield here from the
Right,
what's it called? Right Side
right
Mortgage
side.
Group?
Yeah, no, right way, right way.
Yeah, right way. Yeah, the only way, the right
Exactly.
way. Yeah, okay. Right Side Mortgage Group. So, we're going to discuss a little bit of stuff on mortgages right now because there's a little bit of misinformation, I feel, being put out there by the banks. Big surprise. One of the things is this deferrals. The deferrals, I don't believe they're saying they're giving the true story. What do you
Well,
think, Tanya?
it is going to vary lender to lender a little bit. So, but I mean, you are able to defer them quite easily. I've had clients of mine that have rental properties even defer and easily go online. And because when it first came out, the phone lines were jammed, but now they've got the websites all set up. So you basically go on, get asked three questions, and then they defer them. The only thing is, it's not free necessarily, and I think maybe some people are under that impression a little bit. So that interest, I mean, when you have your mortgage payment, that mortgage payment goes to cover interest and principal. So if no payment is coming in, that interest is just accruing. So what they're doing, lenders are doing, is they're adding that interest to the principal balance. So you are still going to,
Exactly.
yeah, exactly. And the other thing is that I recently just discovered, because as things move along, we keep finding out new things, is, and again, this might vary lender to lender, but when your mortgage comes up for renewal, for example, or maybe you make a change, you have a variable rate and you're switching to a fixed rate, when that happens, lenders are adjusting your payment to be higher, basically, to make up for that loss of time. So if you had, 25-year amortization and you did that deferral, when your mortgage renews or comes up for a change, they're going to make sure you're still on that 25-year amortization.
So your payments are going to increase slightly to make that
Potentially,
up.
yes. And again, that can vary lender to lender. So I would say, double check with your lender. But yes,
Yeah. So it's like I said, it's a great tool and avenue when you're running a little bit tight right
for
now,
sure.
but nothing's free in
No,
life, and the banks don't necessarily tell you
no.
that because I just don't trust banks.
Well,
Okay.
I mean, they have their place for sure, but it doesn't affect your credit either. So, I know that was sort of a rumor out there that, oh, it's going to affect my credit. I mean, they're not going to like the fact that you defer. They don't want you to defer if you don't have to, but it is an option if you are going to end up delinquent on the mortgage, to say they'd rather, have it that way than you going into delinquency.
I think any prudent lender would prefer you to defer rather than
Yes,
default
of
in the
course.
story.
And that's going to
Yeah.
save you because, when late payments show up in the system for, the mortgage, that affects you. They look, when I send in mortgage applications to lenders and, maybe the existing lender, if they've had a default or missed a payment in the last year or 2 years or whatever timeline they can access, that potentially affects their ability for approval. So the mortgage is huge, but so
Yeah.
are all the other
Yeah.
debts too. So, when this first
Oh yeah.
started, one of the things, there's a lot of people that have credit cards and lines of credit. And yes, there's some options, again, with those credit card companies and, car companies and that kind of thing. But it's all going to be repayable at some point. So, I mean, the other thing I had done for a couple of different clients was refinance them, get rid of all that debt. And if, of course, if they've got the equity there, get rid of all that debt, make it into one payment on the mortgage. The mortgage rates are low. You're paying less interest and saving money over the term, and probably, you probably have less payment, monthly payment too, at the end of
Yeah.
the day.
So in terms of mortgage rates right now, is there much happening in the market?
Well, so when COVID hit, we saw a big increase in the mortgage rates. Now, people would have heard about them coming down, but that's because Bank of Canada was lowering their prime rate, which is directly affecting variable rate mortgage holders. But we saw the fixed rates go from, 5.964, wherever they were at that time, to over 3% in the matter of 2 weeks. Now, since that time, they have slowly been drifting back down, and we're pretty much at the same place we were before COVID happened. So that's good news.
So what's the 5-year rate right now?
Well, that's a tough question sometimes, because it depends on if it's a 25-year amortization, a 30-year, if it's a high ratio mortgage versus conventional. But at the end of the day, you're looking anywhere from, there's a high ratio deal at 2.44 to 2.79% right now for fixed rates.
So there's still pretty good rates.
Yeah, for sure.
Yeah, without a doubt. Yeah, and for all you folks out there know, I mean, Tanya's a mortgage broker. She's dealt with me for years. She could do refinancing. She could do your purchase. She's great. She even did my son last year, and I wouldn't recommend him to anybody other than somebody I really trust. I felt sorry for her having to deal with him.
But he was great. I love you and all your clients. No, it's a pleasure dealing with you all the time. So,
yeah. Question for you: are you restricted to just lending in the Lower Mainland?
No. So, as a licensed broker, and a lot of people aren't always aware of this, we do have a license. We do not work for any one particular bank. We had to go through schooling to get our broker license. And we can deal all over. So, again, with this COVID time, it definitely, comes up more. We don't need to even meet people, really. I mean, I like to meet people, but during this time especially, all the documents can be signed electronically. I've FaceTime with clients that are sitting in bed, and we're going over their documents to sign. New ways are just becoming a bit more normal, so it's easy to deal with us. And yes, we can deal all over.
So there you have it. That's pretty good.
And the other thing,
are you seeing any other things happening?
Sorry, just one more thing. You do not pay for a mortgage broker. That question comes up for me over and over, and I always have to kind of laugh, because as I'm almost done the deal and working with clients, they ask, well, and now how do we pay you? And I'm thinking, oh my gosh, you don't pay me. I wish you had asked that at the beginning. I'm wondering, what were they thinking? How much were they, without asking up front? But anyways, no cost for mortgage brokers.
The mortgage broker is a really good option for people. That's what I find, because sometimes people think, oh, I'll put just the bank. But sometimes the bank doesn't suit your parameters.
Well,
and mortgage brokers have got fewer more options.
Of course, for sure. And then the other side of that is that we don't work for any one lending institution. We work for you. So I don't get paid unless I find you a mortgage and make you happy. So it's only in my best interest to find the best product and best rate out there for you. Because, so again, working with a bank, you're going in and talking to the bank employee. So they have a dual job. One, to, yes, take care of you. But secondly, they're working for the profit of the bank. So, I deal with banks too. So a lot of times I've had, TD, Scotia, they've walked into a branch and the branch told them one rate, and then they called me up and I ended up getting them a better rate even. So, and then just service wise, you don't have to go and book those appointments and that. And, again, sometimes you've got people that their bank told them no. I get a call from them and they're, explaining and no problem, we can get you approved somewhere else. Every lender has different rules. So, there's always options.
Yeah, which is great. Yeah. It's absolutely fabulous. I really do. We're not tied down to one bank. That's my.
Well, exactly.
I don't like being tied to anybody.
That's the thing. You get options, and what I like to normally do too is, because really the rates are very similar lender to lender. You might have a little small difference, which at the end of the day is usually nothing in regards to the payment. But what I like to do is, okay, here's ABC lender. One could be a bank, one could be a credit union, one could be a mortgage company. Here's the pros and cons of these three different options. Then the client can decide what they want and make that choice that for what suits them best.
Yeah, yeah, it's good options. I like that. So, are you seeing the banks' lending criteria change at all with this COVID stuff?
Oh, yes, for sure. So, um, for example, some lenders, if you're self-employed, every single deal is going up to their head office for sign off. They're really looking at the line of work, basically, or if you're laid off. So anybody that's working, not a problem. But if you're self-employed, and they're going to really inquire a little bit more into what it is that they do, and if does it make sense, they're still working, are they losing income, what's the likelihood of the recovery after COVID, that sort of thing. And then same with the employed people who have been laid off, or what line of work are they in, what store did they work at, or whatever, what's the likelihood of that store reopening, or stuff like that. They're really considering what it is that they did for work and what the likelihood of that return is going to be.
Yeah, yeah, yeah. So basically, you want to keep all your ducks in a row.
Yes, for sure. Yeah.
Yeah,
Yeah, it's
yeah,
scary.
yeah,
I mean,
yeah.
I don't like to see that happening. They're definitely scrutinizing a little bit more, but I mean, it's understandable.
Yeah, this Canadian
Serve.
government's emergency response
Yeah.
benefit. Yeah. So, how are the banks looking at that?
If you have a new application that you're looking to refinance, or you're buying a property and you're getting served, they are not looking at that at all. If you had a deal
Okay.
in the system already before this, for example, purchase that didn't complete for 3 months and you got laid off from work, that will be okay. They are taking all those things into account, because some of them know, hey, we know your store is closed, you're definitely not working, or whatever the job is. So they
Yeah.
aren't going back and saying, oh no, we know you're off now, we can't do your mortgage. They're looking at everything, and they really are working with people that have existing stuff going on. But anything new, you just need to wait till, if you're out of work.
Yep. Yep. Be back on your feet. Totally.
Yeah.
Okay. No problems. Okie dokes. You got anything else you want to add there, Sanya?
No, I think we covered
I
up
think
a
you covered a
lot.
lot there.
Yeah, no, thank you
Yeah.
so much
Yeah.
for this. I'm glad it
That
worked
was
out
good.
on our first time.
Let's hope so.
Yeah.